Welcome to the third quarterly tax dialogue series. I hope all of us are doing well. So for today's dialogue, today's conversation is going to center on the topic navigating Ghana's import taxes, the strategies for compliance for businesses. Before we go into the conversation, I want to just first of all welcome you, and then also just go through some few housekeeping rules so that we are all aligned. And then I will give a bit of an introduction to the topic. I will go ahead to introduce the speaker, and then we'll proceed from there. So to start with, please kindly mute your microphones. In fact, upon joining the webinar, your microphone has already been muted to prevent background noise from disrupting the speakers and other attendees. However, should you want to ask a question, you're allowed to raise your hand using the hand raise icon on your screen, and then you'll be given access to speak. If you have a question for the speakers, please use the dedicated Q&A feature on your screen, and this will help me to track and address your questions efficiently. If you experience any technical difficulties, such as issues with your audio or video, please share this using the Q&A feature and we'll respond to it. We encourage you to stay for the entire duration of the webinar, as valuable information will be shared throughout the session, including the Q&A segment. Also, kindly note that this webinar is being recorded for future distribution. We are also live on Facebook. And if you require any further information on this webinar, please feel free to contact UKGCC at info@ukgcc.com.gh. Okay. Now, when it comes to Ghana's tax regime, it includes several import-related taxes and duties, and they significantly impact businesses involved in cross-border trade. These include customs duties, VAT, and its related levies, special import levy, and a whole lot of levies, which are imposed at the port of entry. For businesses, especially those in manufacturing, distribution, or retail sectors, import taxes represent a major cost component and directly affect competitiveness and profitability. Despite their importance, many businesses find the import tax landscape complex and opaque, but misinterpretation or non-compliance, whether intentional or due to lack of knowledge, can lead to penalties, delays in clearing goods, or increased costs. As Ghana continues to rely heavily on imported goods and raw materials, it is vital that businesses understand the intricacies of import taxation and how to navigate them effectively. This session, the third in UKGCC's quarterly tax dialogue series, seeks to empower businesses with the knowledge and tools to comply with Ghana's import tax regulations, while optimizing for cost and efficiency. So today, what we are seeking to achieve with this webinar is, first of all, to educate businesses on the structure and components of Ghana's import tax system, to highlight key compliance strategies and common pitfalls businesses should avoid, to provide actionable insights on how businesses can legally minimize import tax obligations and improve operational efficiency, and to facilitate dialogue between businesses and the tax authority to improve compliance and planning. Today, we have as our speaker, Ruben Kweku Satu. Ruben is a senior revenue officer at the Customs Division of the Ghana Revenue Authority. He currently holds the following roles: Valuation Officer at the Customs Technical Services Bureau, Officer in charge, Strategy, Planning, Monitoring and Evaluation at the Customs Technical Services Bureau. He's a member of the National Valuation Database team, also at the Customs Technical Services Bureau. With regards to his education credentials, he has a Bachelor of Science in Development Planning, a Bachelor of Laws, and a Master of Laws in Tax Law Policy and Practice. He will be our presenter for today. So without much ado, I'll hand over to Ruben so that Ruben takes us through the presentation. Afterwards, we will have a discussion and then we will open it up for a Q&A. Thank you very much. So Ruben, I'll hand over to you now. Thank you.
Good morning, fellow stakeholders in the import space. I'm Ruben Kokusatu, Senior Revenue Officer, Customs Division of the Ghana Revenue Authority. Today, we are going to discuss the topic, navigating Ghana's import tax strategies for compliance for businesses. As part of the discussion, I will introduce you to the Customs Division of the GRA, the role customs plays in the import, major import taxes administered by customs, agencies in the import space, compliance, basis for compliance, and benefits of being a compliant importer. Importers' role in compliance, documents and documentation, compliance strategies, clearance platform and other available facilities, appeal processes and procedures, and we'll summarize what we are going to discuss. Before I proceed, what is an import? Or when they say you import something, what does it mean? It means to bring something or cause goods to be brought into Ghana. When you bring something or you cause goods to be brought into Ghana, that means you've imported an item. Then you have to deal with Ghana Customs and other agencies. So formerly it was called SEPS. Now it's the Customs Division of the GRA, as per the Ghana Revenue Authority Act 2009 Act 791. Operations of Ghana Customs is mainly regulated by the Customs Act 2015 Act 891 as amended, Revenue Administration Act 2016 Act 915 as amended, the Customs Regulation, the Customs Code. Our processes and procedures are also regulated by provisions of the General Agreement on Tariff and Trade, ECOWAS Trade and Liberalization Scheme, after UK-EU Economic Partnership Agreements, WTO protocols and agreements and publications, Commissioner General orders and agreements with stakeholders and traders and other regulations and acts of parliament. So that is Ghana Customs, and those are the laws that regulate what we do. So if you want to find out whether you are going to comply with the rules of import, either you go to the Customs Act, the Customs Regulation, the Customs Code, or the Revenue Administration Act, and also all protocols by WCO and WTO, and all agreements entered into Ghana, trade agreements entered into Ghana for regulation of preferential rates. So the role of customs in import is mainly for revenue generation for national development. That is the first role customs performs concerning imports. When goods are brought in, they are liable for taxes which are supposed to be paid before the importer takes care of these goods and take them away. And those leads to revenue generation for national development. And customs is also enjoined to facilitate compliant trade. When a trader is compliant, you have to facilitate the clearance of goods of that trader for the trader to be able to achieve his or her aim, and also to motivate other people to be compliant. And that is the main reason why we are here today. We also do community protection. We ensure that goods that are brought in comply with other sanitary and phytosanitary measures, and so as that the community is protected. And we also do national security by ensuring that things that can destabilize the country don't come in. Customs also perform agency duties on behalf of some agencies who may not be present at the time of import. So those are the major roles customs perform in import. So before we proceed, what are the major taxes and levies administered by customs? The first major tax is import duty, and is based on the CET, the Common External Tariff. That is a tariff among ECOWAS countries that determine duty rate of products that are entering into the ECOWAS region. We also administer import value-added tax, that's VAT, import NHIL, get fund, SI tax, depending on the products. And we also administer ECOWAS levy and African Union levy. There are special import levies on some products, and we also administer COVID-19 health recovery levy. Network charges also apply when goods are being imported. And upfront VAT, when a person who is supposed to register for VAT with the Domestic Tax Revenue Division has not registered or has not fulfilled his or her tax obligations, he or she will be required to pay an upfront VAT on his imports or apply to domestic tax and do the necessary registration for it to be waived or deferred. So looking at the import duty, we have band of taxes ranging from 0 to 35. 0 is mainly for essential social commodities. Those are commodities like medicines and books that states consider essential for the social well-being of the society, therefore come under with 0 import duty. However, taxes and other VAT and other taxes will be paid. Then the 5% go for raw materials or capital goods that mainly is used in production. It can be machinery or plaster of Paris, POP, that will be used in the production of cement. So it's a raw material for production. It comes at 5%, or it can be machinery that will be used in production. They come at 5%. Then 10% go for intermediate goods, goods that are used to produce finished goods. Sometimes they come, like example is steel pipes that we use in our welding production in the country. They are intermediate goods that are used to produce finished goods. So they come at 10%. And an importer who brings in 20% finished goods is supposed to pay 20% on those finished goods. And they are sometimes dresses and other finished goods, you are supposed to pay 20% because they are already finished. And there are also goods that ECOWAS decides for economic development, and it's also to protect local industries. So the duty rate is 35%. And their examples are frozen poultry products, cooking oil, etc., of palm base. So those are the major taxes customs administer when on imports that come into the country. Despite the administration or the imposition of such taxes, importers are entitled to some suspense regimes depending on the intention they have or what they want to do with the goods that they've imported into the country. Importers can decide whether they want to warehouse the goods in the interim so as to pay the taxes later, or they temporarily import such goods for exhibition, trade fair, etc. Importers can also decide to transit their goods through Ghana to landlord countries that are our neighbors. And importers can also decide to send their goods into free zone under the free zone authority, as well as pre-entry for some goods that are perishable or bullions and coins that must be released immediately pending perfection of declaration. Importers also are entitled to parliamentary exemptions, which mainly come in, and MD exemptions, which mainly come in government projects and some government policies that want to ensure that some items or some projects enjoy exemption. And so, such parliamentary exemptions and MD exemptions are currently enforced under the Exemption Act. Importers are also entitled to preferential rates depending on the origin of their products. If it's within the African sub-region and the product is liberalized, under the AFTA, importers are exempted from some duty rates and currently is graduated. So it's not fully 0 for some products. It's keep reducing over the years until you get to 0% for products originating under AFTA in the sub-region. Importers can also enjoy exemption of import duties under ETLS. Goods which are originating from the ECOWAS sub-region are exempted from import duty when the producer or the producer is registered under ETLS. And under that system, importers are supposed to make sure they get the origin certificate and the export declaration from their supplier so as to ensure that when they come to Ghana, they will be able to enjoy such rates applicable. And there's also EU-UK Economic Partnership Agreement, which is in place that ensures that goods liberalized that come from EU and UK enjoy concessionary rates or preferential rates. So suspense regimes and the exemptions we've discussed will have effect on tax. One example will be the tax will be deferred for you to pay later. Or the other options will be the tax will be exempted completely or the tax will be suspended. In all this, importers have the option of rescheduling of tax with the GRA when paying the tax upfront can be a challenge. But mind you, it comes with interest. So the agencies in the import space, Ghana Customs is the main agency or the lead agency in the import space. Domestic Tax Revenue Division of the GRA also is an agency in the import space when you are looking at VAT and its exemptions, deferments and amendments, and other taxes. The Ports and Harbour Authority is the main recipient of goods when they come in. So importers are supposed to know the role of the Ghana Ports and Harbour Authority, what they do and how their activities affect their business. Food and Drug Authority, Ghana Standard Authority are also entities in the country that ensure goods that come in meet some sanitary and phytosanitary standards so as to protect the community from any challenges. Plant Protection and Regulatory Services Directorate also do such things, a Mineral Commission in terms of companies in the mining space. Environmental Protection Agency also regulates petroleum products, same as NPA. So a lot of agencies work in the import space. So importers are supposed to have fair idea of what they do and how they affect their imports so as to ensure that they are compliant and there's minimization of business costs. So what is compliance? Yeah, compliance can be a decision or attempt by an importer or their agent to observe all laws governing importation of goods in Ghana. So when an importer or a person decides or attempts to observe all laws governing importation in Ghana, the person is complying with the rules. And also, what's the basis of compliance in Ghana? Compliance is a legal requirement. Earlier, I discussed laws that regulate import or regulate activities of Ghana Customs. So the acts and the regulations are replete with many provisions that enjoy importers to perform some activities. So it's a legal requirement to comply, and most times they come with sanctions. And even if they don't come with sanctions immediately, when you look at section 121 and 122 of Customs Act, sanctions are repeated over there for acts which, when you do, are deemed non-compliant. Compliance is also a means of enjoying trade facilitation from customs. All over the world, customs is supposed to facilitate compliant trade. So when you are compliant, you will enjoy trade facilitation from customs. So what are the benefits of compliance for a trader or an importer? You avoid penalties, fine, and other consequences of non-compliance. Complying will take you steps towards attainment of authorized economic operator status. Authorized economic operator is the person whose import transaction with customs over time is deemed compliance and is ready to open his books to customs. So such persons are authorized now to enjoy trade facilitation with customs. So that some processes that every other person go through, they don't go through. So they are able to get fast clearance of their goods. So when you are compliant over time, it's a step towards attaining that status. And you get a favorable risk profile when you comply. Therefore, your goods at the ports may not need to be open, but rather allowed to go based on your documentation or through scan. Compliance will enable an importer to minimize post-clearance audits. Post-clearance audit unit is one of the units of Ghana Customs. They come into the space to ensure that goods cleared and taken to home or warehouses by importers comply with documentation. So they follow up later and check what your documentation. So over time, when you are shown to be compliant, automatically there will be minimization of post-clearance audits, because when you are given a post-clearance audit letter, you have to deploy your resources to be able to address or even host the post-clearance audit unit. So when you are compliant, it will minimize your post-clearance audit. Importers are, despite being enjoyed to use custom house agents who are licensed for their operations or clearance of goods, they can also become self-declarant, where they pass declarations and declare goods themselves. And being compliant is one of the steps towards becoming attaining a self-declarant status. Compliance will also enable you to minimize costs, because for persons who are into production, sales, and other things, imports feed into other economic chain. Therefore, when you comply with what is required of you for trade, you'll be able to minimize your costs in the other aspects of the economic chain, thereby overall reducing your business costs. When you are compliant business or importer, it enhances your reputation, because an importer who is not compliant can get bad publicity in the news for not being compliant. But when you are compliant and over time GRA announces top taxpayers, it enhances your reputation, and compliance also ensure overall sustainability of business. Because when you don't comply, you may not be able to, the business may be sustainable artificially. When there's serious audits and exacting of the necessary penalties and fines, the business may collapse. So when you are compliant and the business grow organically, you'll be able to, your business will be sustainable. And there are whistleblowers and employees who will be ready to report on you when you are not compliant. And some may even attempt to hold you to ransom. So you avoid being held to ransom by whistleblowers and employees when you comply. So as I discussed earlier, when you don't comply, fines will be imposed or penalties. Sometimes the goods can be confiscated, legal actions can be taken against you, and there will be persistent or frequent post-clearance audit on you. After we've discussed the benefits to the importer when he or she is compliant, what is the importer's role in compliance? An importer or their agent must have fair knowledge of all import requirements. That is the first and foremost thing to do. When you have fair knowledge, you know what to do and what not to do to avoid sanctions, penalties, and to be able to pay the exact tax required. Importers should contact customer service when in doubt. When importers are in doubt, they should go to contact Ghana Customs customer service. And importers are also enjoined to deal with accredited custom house agents and freight forwarders, because such persons are trained and licensed. They can be able to know what to comply with so as to avoid the effects of non-compliance. Importers should also embrace effective and efficient record keeping, because when it's records that you use to defend your transaction during post-clearance audit or anytime you have an issue to answer with customs. So if you are able to effectively keep record, you can be able to defend your transaction and escape any penalty or any consequences of non-compliance. Importers should also take advantage of all technological tools available to customs, available in the country, in the import space. And importers should also eschew all shortcuts. Custom processes are mostly according to the revised Kyoto Convention, which is about simplification and harmonization of processes. So most of our processes are harmonized and simplified. Any attempt to go through a shortcut will just you will have to go back to where you start from, or you have to face consequences of non-compliance. So those are the roles of the importer in compliance. So after the importer knows his roles, he also has to discuss what document and documentation an importer needs. The essential ones are you need your transport documents, your bill of lading, airway bill or your way bill, your commercial invoice, your packing list, and your import declaration form, your certificate of origin or origin declaration, your permits, licenses, exemptions, and authorizations, your bonds and guarantees, your sales contract must be ready, your documentary credits and evidence of payments, LCs and SWIFT must also be ready. And if you have any advance ruling with Ghana Customs, it must be ready. So these are the documents an importer needs to justify his claim or to defend his transaction so as to be able to pay the applicable tax. So what are the compliance strategies that are available to an importer? Importers are to pay attention to details at the import declaration form acquisition stage, the IDF stage. At this stage, every information about your transaction will be captured. And most of the time, this is the document used to remit or transfer money for items purchased. So when this document is not captured or filled or completed properly, you may have issues from the start about your transaction. And also important are to ensure that IDFs acquired during at the beginning of each transaction for the payment or for raising LCs and other documentary credits are used at the time of clearance, so that it will not appear as if you've remitted or you transferred so much money out of the system and you've not brought in any goods, because those IDFs will be hanging. Even if you've transferred so much money out and you are bringing the goods in part, The master IDF has to be there, and sub IDFs will have to be referencing it until the amount is exhausted. So at the acquisition of the import declaration form stage, this is very important to the importer. You should not leave it to chance. Due diligence must be done to ensure that every documentation concerning the cost, the product, the description, everything is captured so that at the time of import, there will be few or minimal challenges. The importer must also ensure that their sales contract, sole distribution agreement, invoices, credit capture goods, quantity, value, and discounts. And the sales contract or the distribution agreement must be properly executed and must capture everything as needed. Because this will help in convincing custom in case of dispute. When custom disputes any aspect of such documents, you should be able to prove the transaction you've undertaken. So your sales contracts, your distribution agreement, your invoices must clearly capture your transaction. Importers are also advised to acquire all certificates of origin and origin declaration documents if they intend to take advantage of any preferential rates under AFTA, ETLS, EU, UK EPA. Because the goods, there are rules governing the origin of goods. So importers must ensure that they get the origin certificate that shows that the goods originate from there and they meet the origin criteria. When you are able to acquire such documents and you come to Ghana, at the time of passing your declaration, you will be entitled to such preferential rates, which will let you enjoy some relief or exemption of duty. Importers are to take advantage of all pre-arrival processes. Custom has in place several pre-arrival processes. So before your goods arrive, you can pass a declaration, know how much tax is liable, and pay the applicable duty before even the goods arrive, so as to be able to clear your goods in time to avoid demurrage and other challenges. So when you are able to take advantage of all pre-arrival processes, what will happen is any dispute or all disputes can be resolved before the arrival of the goods, thereby minimizing demurrage when the goods will have to overstay. And it also helps you minimize rushing through bank formalities if duties will be finalized by the bank. When the goods have already arrived before you got to know your duties payable and going through bank formalities, it may be stressful. So you have to take advantage of all pre-arrival processes before the goods arrive. It will also afford you to acquire all banks and insurance guarantees and bonds for goods that the taxes will not be paid immediately, or they will go under the various aspects regimes I've discussed. When you are able to take advantage of the pre-arrival processes, you will know your tax applicable, and you can work out your insurance and bank insurance and guarantees. Taking advantage of all pre-arrival overstaying, detention, seizure, or forfeiture of goods. Engaging qualified or an accredited professional freight forwarders and custom house agents, or employing qualified staff in your organization is one of the ways of ensuring compliance. Because what will happen is when you engage the right professional or a qualified staff, you avoid incorrect classification, which may either lead to overpayment or underpayment with its associated penalties. It will also prevent undervaluation or inaccurate valuation, either on your part or on the part of any your customs, where you will be able to pay the appropriate tax. It will minimize improper documentation when you get the right professionals or your employer persons with the requisite skills. And it will also ensure that you acquire the necessary authorization from all MDAs in Ghana whilst waiting for your goods. Custom has a facility in place called Advanced Ruling Facility, where persons with questions concerning their imports can apply to the Commissioner General and ask for the tariff classification, the valuation, the applicable rules of origin for products being imported. And this ruling, when your conditions have not changed, will be binding or custom. So you can, in advance, ask for this ruling to know what you are supposed to pay, what conditions apply to your goods before the arrival of your goods, or even before the arrival of your goods. So this will ensure that you are certain about your classification, because classification goes to the applicable tax rate. Then you'll be certain about the value custom will apply, whether you are going to accept your value or we are going to apply value of identical goods or value of similar goods, or we will use any other method to ensure that your value is determined. It will also ensure your origin is determined and you enjoy your applicable preferential rate. Therefore, custom advance ruling is one of the processes in place when a trader wants to ensure he or she is compliant by taking proactive steps to ensure he or she acquires such ruling before the arrival of the goods. Traders or importers can also take advantage of custom post-clearance audit facilities. Custom undertake post-clearance audit, as I discussed earlier, to ensure that goods imported are compliant. Therefore, when you take advantage of that facility, they will help review your processes and identify all risk areas of non-compliance, and they will even show you whether you have overpaid, or they can even recommend you for an AOE status or lower your risk profiling. So importers or traders are supposed to take care of this, advantage of these facilities to ensure that all areas of non-compliance or all risk areas of non-compliance are reviewed and their profile is enhanced with Ghana Customs. And because of the pre-arrival system in place for Ghana Customs, all other MDAs are also hooked onto the system. Therefore, when you are going through your pre-arrival formalities, an importer is also ensured to apply to all MDAs that pertain to their goods and the ministry, if there's any exemption, or the other agencies, to ensure that they comply with all sanitary and phytosanitary requirements or all technical requirements of their goods. This will ensure that by the time the goods arrive, you comply with all processes and all requirements of the law. So those are the strategies that an importer is supposed to go through, or when you go through, you virtually be complying with the rules of importation. When Ghana Customs currently has a platform called Integrated Custom Management System, or ICUMS as it's called for short. It's the platform used for clearance of goods in Ghana, where Ghana Customs and every other agency is hooked up. What does ICUMS do? It serves as a single window platform for all clearance processes. Therefore, when you log in pass your declaration, every agency on the platform gets to know of your declaration, and you can easily apply for any permit, exemption, license, and authorization, and so that you don't have to be switching between system and to incur costs. So the ICUMS currently is a single window platform that for speedy clearance of goods. It integrates most stakeholders, as I discussed earlier. Every stakeholder that matters is on the ICUMS platform. Therefore, be rest assured that in your quest to comply, when you use the ICUMS platform, you will be able to have access to all stakeholders. And the ICUMS platform reduces human intervention and minimizes corruption, because you can be at the comfort of your office or your home and pass a declaration, and you will not have any human interaction. Therefore, whilst you are complying, you are also minimizing human interaction. The ICUMS platform enables better tracking of consignment. So as your consignment has arrived in Ghana, when you log onto the platform, you can be able to track your consignment to know where it is, whether it's at a freight station, where it is in the chain. So that is what ICUMS platform helps. It also streamlines goods classification, valuation, and duty computation. The system is designed in a way that when your tariff rate is determined, your goods are valued, the calculation of the valuation, the tax or the duty payable is automatically generated. It will not be influenced by anybody because it's computed. It's supposed to ensure that as you comply, you will get what is due you. There are other platforms like a Ghana.gov platform that ensure payment of your taxes at the comfort of your home, and you can pay your taxes at most banks in Ghana. So when you are saving for a bank and you need to pay a tax, you just have to issue your check or go through the bank process and pay your tax. There's a system called NPS Navies that helps in scheduling of tracks with NPS, and There's NPS agent portal that generates NPS terminal charges. So those are the platforms available for clearance of goods currently in Ghana. The custom is in the process of deploying advanced cargo information and the deployment of artificial intelligence that will enhance our work to meet your compliance requirement. After complying with the processes and procedures of customs or concerning the import space, there are appeal processes and procedures if you are dissatisfied with any action of customs related to your goods. So you can appeal on the ICOS platform at the instant when you are not dissatisfied with your tax assessment, and it goes to the Ghana Custom Technical Services Bureau, where your appeals will be looked at. When you have a genuine case, it will be reviewed. When you don't have a genuine case, what is done will stand. Or you can petition or made an application to the Commissioner General, Commissioner Customs, or the relevant commissioner, deputy commissioners, or assistant commissioners, and unit heads, where you think there are challenges or you have a genuine case concerning any action taken by customs. There's also an independent tax appeals board when you've exhausted customs processes and you are still not satisfied before going to the court system. I would advise that aggressive tax avoidance is not legal in Ghana. Therefore, when maybe someone may say, okay, we can help you avoid ABC tax, but when it's too aggressive, or when the Commissioner General has to recharacterize your transaction and exact the necessary taxes and penalty. So, as we discussed in summary, as an importer or a person who wants to operate in the import space, you have to obtain your declaration, import declaration form, your IDF. You acquire the necessary licenses, permits, and authorization. You go through your sourcing and all purchases and supply procedures. You gather your essential trade, transport, and clearance document. You take advantage of the advanced ruling facilities you have. You take advantage of the pre-arrival facilities customs have. You submit your declaration. The declaration goes to custom classification evaluation and determination of the applicable duties and taxes. Then you pay your duties and taxes. You provide the necessary bonds and guarantees when you are going under any of the suspect regimes. You clear your goods from customs, the shipping line, the port authorities, and you carry your goods away. You arrange your transport, and your goods are taken away. But most important, you have to keep your records or your documentation, because this will ensure that you comply with post-clearance requirement or any audit that customs may want to conduct on your goods or on your transaction. Therefore, you have to take advantage of the post-clearance audit. So what are the costs incurred in the import space? Your cost of goods, your freight, your insurance, your shipping line fee, terminal fees, duties and taxes, warehouse fee, distribution costs, and other statutory fees, and other overhead costs. So when you have any challenge or any query or question and you want to contact Ghana Customs about your imports, you can visit the Customs headquarters at the ministries opposite the Law Court Complex or GRA head office near the stadium, or all assistant commissioners or heads at all ports, harbors, and frontiers. You can also visit GRA website, gra.gov.gh/contact us / or use contact GRA at info.gra.gov.gh. There are toll-free numbers on the screen as I discussed, and there are also WhatsApp numbers. So basically, traders wishing to comply so as to avoid effects of non-compliance can basically take advantage of several processes and procedures and facilities available for them to meet their tax obligation, to ensure that their trades are facilitated and they meet all community and security requirements of the state. Thank you very much for your attention.
Thank you, Ruben. We really appreciate the insightful presentation that you have just given. Thank you very much. So just before we move to the Q&A, to discuss, what you have. I want us to start by, first discussing a few things based on the presentation that you have, and then maybe asking for some few clarifications so that at least we are able to drive home better the conversation that has been had. Okay, so to start with, you did mention suspense regimes, things like warehousing, temporary importation, etc. Can you maybe elaborate a bit further on them? Maybe about in what situations would a business in Ghana, be able to take advantage of them, and what benefit these suspense regimes give?
Trade transactions enjoy some discounts when maybe quantity or seasonal when goods come in season. So traders can take advantage of such opportunities, acquire goods in large volumes, bring them into the country, warehouse them once, take them in bid to the market, whereby the duty they are supposed to pay when such goods come in immediately are deferred once the goods are in the warehouse and they are taking them bid to the market. It will ensure that they can also take care of advantage of regional markets around Ghana. So when the goods, you buy them in large quantity so as to reduce your cost, or the goods are in season and you are able to buy them in large quantities to reduce your cost, or for any reason you will not be able to pay the tax upfront. Warehousing is one of the regimes available where you register with customs, warehouse your goods, and take them in bids and pay the tax as and when you are about to take your goods in bid. This will also help you to, as I said, minimize your costs and also avoid the challenge of getting your goods detained or forfeited to the state due to lack of availability of money to pay duties and taxes.
So essentially, if, for example, you have had to, a business has had to import a lot of things, but then, they do not have that much in terms of finances immediately, or their cash flow does not permit them to be able to pay all the applicable taxes, they can then look at employing some of these suspense regimes so that they legally delay when they have to pay the tax. That is that is at the time when maybe they've even identified a buyer and are ready to now ex-warehouse the goods. So essentially, this is an avenue that customs is given to businesses to be able to manage their cash flow. Would you say that is correct?
That is correct. And in addition to, persons who are into production can also bring their raw materials, and as and when they use it in production, or they're about to use it in production, then they pay the tax, then use it, because in production, you may get a lot of raw materials coming, paying the tax, the duties upfront, whilst you've not even processed, can be challenging to you. So when you are into production, you can bring your goods in, register your warehouse as an inbound manufacturing facility, whilst the goods, the raw materials are kept in your warehouse, and bit by bit, you're about to use them for production, and you pay the applicable duties on them. And it also helps you to also produce in Ghana and export to all other countries around without necessarily have to pay the tax on the importation of your raw material. Thank you.
Thank you very much, Ruben. I think this is insightful for businesses to note, because it is possible to manage your cash flow well when whether you are manufacturing or you are importing in large quantities to take advantage of economies of scale. These suspense regimes exist to help you manage your cash flow, and then also to manage the timing of paying taxes, and to do so legally. Thank you very much. Ruben, in your presentation, you did mention preferential, rates and special preferential regimes. Specifically, you talked about AfCFTA, that's the African Continental Free Trade Area. You talked about the ECOWAS Trade Liberalization Scheme, or ETLS. And then you also mentioned the Economic Partnership Agreement. In general, what does a business need to assess these preferential rates, or what process do they need to undergo?
Thank you. First and foremost, the business is supposed to know whether such a product they intend to bring in is part of the product liberalized under whether AfCFTA, UK, or ETLS. So because that's the first and foremost, or whether your supplier is registered as a supplier from that country. Then after knowing whether your goods are liberalized as per AFTA and UK EPA, or whether the supply is registered under ETLS. Your supply is supposed to give you what we call origin declaration or certificate of origin, because there are several rules that govern the determination of origin of goods, whether the goods are wholly obtained or value addition or substantial transformation. So that origin document declaration must show the criteria by which you meet the origin, the criteria by which you meet the origin of that goods, or the criteria by which those goods are claimed to originate from this country. So that document has to indicate that criteria, and it must show that yes, these goods originate from here. And by the time you were exporting, various competent authorities have endorsed such a document. So when you are able to get the origin declaration from your exporter, your exporter also have to give you your export declaration, because those are two documents that will have to confirm each other that these goods were shipped from your country or were produced in your country and shipped to Ghana, and not from any other place through any other route to Ghana. So if you're able to get your origin declaration and your export declaration appropriately endorsed, you will be entitled to a preferential rate when the goods originate from either the sub-region or the continental level or EU or UK, depending on what preferential rate you want to take advantage of.
Thank you very much. So essentially, if I get you well, it means that it is first and foremost important to determine where your goods are coming from, and where, if it is coming from a particular place, you would need a document known as the certificate of origin, which will authenticate whether that particular good from that particular location qualifies for the preferential rate. Okay, thank you very much.
To add, the goods just saying is produced here does not necessarily mean it will meet the criteria, because each process has a criteria to meet. So you have to ensure that the goods you are bringing in meet the criteria. It's not that, because it also happens to Ghana also, when you are sending your goods out and you don't meet the criteria. It may write on it made in Ghana, or it may say it's shipped from Ghana. But when you don't meet the criteria, you may not be able to enjoy the rates. So the essential thing is the criteria must be met, and the criteria must be on the origin declaration and the export document.
Great, thank you very much. I think that makes it clear. That makes it very clear. I want to maybe dive a bit deeper on the EPA. You know, I think in recent times, there have been a lot of conversations and a lot of, if I may say, noise on the AFCFTA, and to some extent on the ECOWAS trade liberalization scheme. But with regards to the EPA, I think it has been relatively, silent. What benefits exist under for example, the UK Economic Partnership Agreement? Does it also lead to a reduction in tariffs?
Yes, under the EU IEPA, Interim Economic Partnership Agreement, there is similar to the AFTA model, where the goods are not zero at the start. They are gradually eliminated. The duty rates are gradually eliminated over time. So over years, the duty rate keeps reducing. So any goods coming from that continent, or any goods originating from the EU, and they are able to show the origin being the EU, and they have the appropriate REX number, they will be able to qualify and enjoy such preferential rates coming from the EU. So as long as you meet the origin criteria, and you have every documentation, and you have every identification number, you will be granted a preferential rate under the EU EPA.
Okay. My guess is that when you refer to the EU EPA, I think post-Brexit, I think there was also a UK, the UK also kind of adopted more or less the same thing. So it applies also to goods coming from the UK as well.
Yeah.
Thank you very much for sharing this insight. Maybe next, I would want to maybe ask some questions with regards to the channeling. In your presentation, you mentioned that one of the advantages of being compliant from a customs perspective is that it enables you to, it can help you to get a better or more favorable channeling. You talked about yellow channel, green channel, etc. Can you elaborate a little bit on that, more on that?
Yeah, custom has basically about 4 risk profiling of goods that come in. Goods that come in by persons deemed as authorized economic operators are declared as blue. They move very fast through the processes because their books will be audited later, and they were compliant to start with. The persons who are not in that category but are compliant and their goods are not deemed as high risk will also go under the green channel, where the documents will just be inspected at the ports after the determination of duties and taxes at the CTSB. Then they will just go with their goods after the documents have been determined. But even under that green, over time, we will have to switch your profile to verify whether the basis of granting you that green is still holds, whether you are still compliant. Then persons who are relatively compliant, the goods that are not very risky go through what we call the yellow risk profiling, where the container is scanned, and we call it non-intrusive examination. They will not enter your container to examine. It have to be scanned. Then we will have to determine whether the items that are in it, they look like what you put on your declaration. Then a risk profile of red that will ensure that your container has to be open, and whether fully examined, partially examined, depending on the nature of the goods and what the profile or what the profile says about you. So those are the profiling that's available from blue, green, yellow, and red, depending on your compliance level with customs and the nature of the goods you are bringing.
Wow. So if I get it correctly, I'm just trying to rephrase, and if I get any place wrong, please feel free to correct me. So customs, as part of trying to facilitate trade and also to, as much as possible, help you to clear your goods quickly, and yet making sure that compliance, they ensure compliance. What you've done is that you have profiled the imports that come into the country based on certain risk ratings. So if I say color characterization. To start with, you mentioned that there is blue, that has to do with those who are authorized economic operators or AEOs who have that designation. Then after that, there is green channel. And my understanding is that the risk profiling is based on either the nature of the goods being imported or the person who is importing it. So if the person is someone who habitually is compliant, then the likelihood of the person getting a more favorable risk profiling is high. And then also, if the nature of the goods are not so risky, so far as customs revenue is concerned, then it may find itself being in the green channel, which means that very quickly the goods are cleared. Now, if the goods itself are not so risky, likelihood is it may fall in the yellow, where all customs will need to do is to just scan the container and you'll be fine with it. But for certain kinds of goods, and my guess is that also certain kinds of importers who probably have had problems with customs in the past, they may be designated as red, in which case customs would have to maybe even do a physical search of the goods to be sure that what they have declared is actually what is in the containers. Am I accurate up to this point?
Yeah, you've captured it accurately. That is the position.
Great. So you talked about AEO, so authorized economic operators, or that regime. I would kindly ask if you can elaborate a little bit on it. What it is, how long it's been in operation, and how a business, for example, if any of the participants would want their company or their business to consider being designated an AEO, what process they would need to undertake.
There are officers or units designated for that characterization for that characterization. So you have to submit an application to the Commissioner General or Commissioner of Customs, hoping to be designated as such. Then open your books to Customs for audit. Put in the necessary facilities that you're supposed to put in, whereby your bonds and your guarantees, whereby if you're not able to pay the taxes, how Customs will have to recover those taxes. Put in the appropriate qualified staff and also put in the appropriate IT infrastructure. So your record of compliance, coupled with what I've discussed, will be a favorable consideration for you to go under AEO. So it's based on our application, your record of compliance, and putting in place the IT infrastructure, the staff, and your ability to comply with the generally accepted accounting principles. So if you are able to comply with the generally accepted accounting principles and your books are open to Customs and you are compliant, the possibility of getting qualified as an AEO is very high. Thank you.
So essentially, for businesses that have a proven track record of good compliance, if you make an application to the Commissioner for Customs or the Commissioner General of the Ghana Revenue Authority to be designated as an authorized economic operator, based on your compliance record, there's a high likelihood that you would get a favorable response. But when GRA is looking at that, one of the key things they are looking at is the systems you have in place, and very importantly, your compliance record. And the benefit, my understanding is that the benefit is that it helps you to clear your goods faster. Likelihood of incurring certain costs like demurrage, etc., are relatively lower. And then you are able to, the time from port to your facility is also shortened. By virtue is some of the rewards that Customs is trying to give to companies that comply. Am I correct?
You are correct, because an example at what happened at the CTSB, where the applicable duty is determined, you have to go through 3 processes to get the duty determined for you. But for AEOs, it's just 1 process. It's just moving. So you don't have to go through that one, because 1 process, then you are gone. Then you go to the port, get your blue, which will ensure that you will not get an intrusive examination unless there's a suspicion and your risk profile is changed based on the maybe improper documentation, or maybe you've just employed a new staff who is not abreast with the process and have not done the things as it's supposed to be. So it goes through, the process is shortened. An example is the CTSB, where you have to go through only 1 instead of going through 3.
Great. Thank you very much. So participants and businesses, please kindly take notes. Customs has found a way of making sure that you are rewarded if you consistently and habitually comply with the laws and regulations of the Customs Act, the requirements of the Customs Act. I see a number of questions in the Q&A chat box. We will be getting there very soon. I will also be allowing participants to raise their hand, and then where you will be unmuted to ask your questions. But before then, I'll still want to maybe ask Robin a few questions so that we go through the entirety of the presentation, and then we quickly switch to the Q&A box. So please feel free to keep letting your questions come in, and we'll do our best to make sure that they are addressed within the time frame. So Ruben, so just a quick one. You did mention something that caught my attention. You mentioned that as much as there is the customs house agents, or what in Ghana we often called clearing agents, a company or a business can also be designated as a self-declarant. Can you elaborate more on that? Because I think a lot of businesses are not familiar with this concept.
Okay, to be a self-declarant, it still starts with the compliance record. Then your ability to get the appropriate staff and putting in place the appropriate infrastructure. When you put in the appropriate infrastructure and you have the appropriate staff and you are compliant, then you can apply as any other person that you want to be licensed to be a self-declarant, because you bring in maybe large volumes or the nature of your business, you want to get an in-house staff who will be handling your product, and you'll be granted that status of being a self-declarant. So it's your compliance status, the infrastructure, and the staff that you have. Because, generally when any attempts of non-compliance will not be viewed as a mistake. So if you don't have the staff in place, it will give you challenges in the process. So when you have the staff in place, the infrastructure, and you apply, and your record shows that you bring in much volumes or the other criteria, you'll be granted as self-declarant status.
Okay, maybe just to maybe rehash this especially for those who may not be aware. So currently, because of the technicalities of the customs process, what customs does is that customs licenses certain businesses or individuals as customs house clearing agents or house agents who undergo certain training and are familiar with customs processes, so that they assist importers in clearing their goods from the ports and in undergoing the customs processes. However, customs is now opening its doors to say this, that if a particular, let's say, business, maybe by virtue of the volume of importation that you do, etc., if you put in place the right structures, if you have the right staff, make sure that they are appropriately trained, etc., customs can designate you as a self-declarant so that you can interact directly with customs and go through the importation process without having to go through, in quotes, a clearing agent. Am I correct, Ruben?
Yeah, and maybe you are a manufacturer who has your plant running and you take your consignments in bits and you also sell outside the country. When you can also apply so that your processes can be done by your in-house staff, so that you don't have to be going through the challenges or at the time of even export out of the country or when you need your raw material. So when you have in place a structure that is working and you have volumes and you think it will involve passing several declarations, you can apply for legalization or designation as a self-declarant.
Thank you very much. Thank you very much. I think this is insightful. So, the topic under discussion today is navigating Ghana's import taxes, strategies for compliance for businesses. So we are looking at the strategies, and I think we have already talked about quite a number of them. We've talked about suspense regimes. We've talked about, that is within the Q&A session. Of course, the presentation covered even more broader than that. We've talked about preferential, regimes like the AFCFTA, the ECOWAS Trade Liberalization Scheme, and the EU or UK Interim Economic Partnership Agreement. We've talked about channels that GRA used to risk profile, that's such as the green channel, the yellow channel, the red channel, or in the case of an authorized economic operator who has undergone additional processes, the blue channel. And then we've also talked about an avenue that an importer has to possibly be designated as a self-declarant, where the person is able to deal directly with customs without necessarily having to go through a customs clearing agent or customs house agent. Thank you very much. I wanted to ask this, and I think that I believe in my interactions with a number of businesses, I've had this question come up again and from time to time. I think sometimes because some people use the services of a clearing agent or customs house agent, there is the tendency for them to leave everything, to them, and sometimes not have visibility on their records, or at least as it pertains to customs. How easy is it for a business, for example, to be able to get data from customs regarding their own operations? So, for example, if I'm a business and I want to know just a summary from your system, how much of imports I have done, if there is any import declaration form, for example, that has been raised but has not been, closed, etc. How is it for a business to obtain such information from customs?
Yeah, to start with, as an importer, you know more about your product than any other person, because you are the one negotiating your costs, your transport, everything. So you know more about your product than any other person. So although you are required to give to a custom house agent, if you are not a self-declarant, you still have to be involved, because the person is your agent, you are the principal. So that principal responsibility over that of the agent will apply to you. Therefore, when an agent clears the goods on your behalf, first and foremost, you are supposed to take the declaration, a copy of your declaration, and keep. Although he's also enjoyed to keep copies, because by taking that copy, you will also assess whether the appropriate thing is done for you in terms of compliance. Then, for assessing whether there's a declaration standing in your name or everything has been done, the process of our system also ensures that if you are labeled as a taxpayer in the declaration, anytime a declaration is made and the tax bill is available and the network is working, the tax payable should be able to reflect on your phone that per this declaration, this is how much you are supposed to pay. So you will know. So the extent that even someone is using your name to pass a declaration, you should be able to reflect on your phone if the network is properly working, that you are about to pay, you are required to pay this tax. That will prompt you to know that this thing is pending in my name. Because ordinarily, a person who is bringing goods will not raise a declaration and will not clear it, because it will not move the goods. But when the declaration is raised and you move the goods and maybe someone is using your name, or all will come to you. But you can still apply to the commissioner, customs, who will either forward it to the CTSB or any sector or post or harbor that is concerned, who will ensure that such records are given to you. So that is the process that are available.
Okay, thank you very much. I think you have mentioned a number of important things, and maybe let me give a little bit of context to the question that I gave and why I asked it. From where I sit, I have, as I said, quite a number of clients who have undergone customs post-clearance audits, and in some cases, sometimes maybe as a result of change in staff, etc., they are sometimes not fully aware of the imports that have been done in their name. Sometimes, I mean, they are genuine. Sometimes, in some cases, they are a bit suspicious. But most of the times, because a lot of the interfacing with customs, some businesses just leave it in the hands of clearing agents and just forget about it. So here we are learning that you can register yourself and set up yourself so much so that anytime your taxpayer identification number is being used, you get a notification by phone. And then not only that, it is essential. Remember, you are the principal and any clearing agent is just an agent. So if there is anything goes wrong, you will be responsible to pay the penalties and you will be held accountable. As much as customs may revoke the license of the agent, you would also, be in trouble if anything goes wrong. So it's important that you make sure you are reviewing the documents. You are also checking the bill of entries that are done in your name and making sure that your records keeping is intact. And then I think finally, Ruben also mentioned, Customs Office also mentioned that if you need a more detailed set of information, you can make an application to Customs, and upon considering it, they can pull or spool that amount of information for you. Thank you very much. I think that
and also you have to ensure that your former staffs are not using your details for their own thing, or a custom house agent you dealt with before is not using your details because it will show up in your name as you are the one who imported those items, and any penalty or fine may apply to you. So especially former staff, you have to ensure that you've taken hold of every information and every details before they leave before they part ways with you. That's one way of doing it.
Well, thank you very much. I think this is very good advice. I recall years ago hearing a case in either, I think, South Africa, where a bank went to check its import declarations and noticed among them that someone had used their taxpayer identification number to import 1,000 televisions. And they were asking that, what is a bank going to do with 1,000 televisions? And if there had been any fraud, they would have been held liable because they were not privy to that. Thank you very much. Thank you very much. So maybe finally about two more questions, and then no, one more question, and then we go in, we look at the questions that the participants have put up, and then to the extent that they have not already been answered, we would go through them. So there is a question on, I have a question. You mentioned advanced rulings, customs advanced rulings. Can you elaborate a little bit on them? I think from the domestic tax side, the DTRD side, many taxpayers are familiar with the concept of a private ruling, where maybe a taxpayer is not too clear about, maybe the provisions of a tax law and wants to know the commissioner's opinion, and then the commissioner general issues a private ruling to the taxpayer. Are you able to elaborate a little more on the customs advance ruling? Is it the same, and what is the process for it?
Yeah, they are not the same but they are synonymous. Let me say they are synonymous, they are not identical. They are not identical, but they are similar. What is the issue is when maybe you are coming new, you are bringing a new product, or that's your first time, or the information that you use to clear goods you have changed, and you are not sure what effect it will have on your tariff classification, what effect it will have on your valuation, or what effect it will have in your origin. Then, because when you come before you are hit with such things that you don't expect, it may throw your business off board. So you submit an application, submitting all your trade information, your trade document, and putting all requirements or all information required by the Customs Act. Then when you submit it, it will be looked at, a determination will be made on each question you've asked, because you have to ask a question, what will apply to this, what will happen, and it is not supposed to contain hypothetical questions. It must be a transaction that you've undertaken and not hypothetical. And it should also not be in relation to what we've already, a goods that you've already cleared. So when the transaction is being undertaken and you submit that question, it will be looked at, and the classification will be done according to the CET, Common External Tariff, and the rules that govern classification based on the material data sheet or the composition sheet that will show that this product, this is how it is, this is what it's supposed to do, these are the constituent materials. That will help in the classification and the rules governing classification, and any ruling or any decision of WCO on classification from the World Customs Organization Classification Committee. If such decisions apply to you, they'll be applied based on the nature of the product, the constituent material, what it will be used for, and what is in it. And also, if it's about valuation of your value, it will be looked at whether it will be done according to the agreement on cost of valuation as per WTO agreement, World Trade Organization agreement, or what we call the GATT agreement. So the valuation will be looked at whether your value as the transaction value is acceptable per the documentation you submitted and other risk profiling instrument, or whether you have a different approach to valuing your product will have to be adopted. And if it's the question relating to origin, then you have to determine whether the goods are wholly obtained from the sub-region or the continent that you claim is coming from, or whether they have gone through value addition on that continent, or the substance transformation, or the goods are coming, maybe they were raw materials that came in from non-originating country, maybe outside the sub-region. Then by the time you process, it has become a different item. So such determination will have to be made and ensure then a ruling will be issued. That ruling most of the time is binding on the Commissioner General. So if that ruling is issued, then it will be binding, and unless the facts you presented change or there's suppression of facts in your submission to the authority, or there's new information. So that's the process that you have to go through. You apply, submit unnecessary documents, is looked at, then the ruling will be issued.
Thank you very much. So essentially what I'm hearing is that where there is genuine dilemma for a business, you do not have to it could be in your corner and then be confused. Where there is a genuine need for clarification or for customs to provide clarification, a business can apply for an advance ruling. An advance ruling where customs will first of all look at all the pertaining information and facts, and then make a determination in line with the Customs Act, in line with the ECOWAS Common External Tariff, and then even in line with, from what I hear, GATS or international norms and other guidelines. And they'll make a determination based on that. And provided you disclosed all relevant information, once GRA issues that ruling will be binding on GRA so far as it pertains to that particular transaction. Correct?
Yeah, that is it. That is it.
Thank you very much. So I think we'll quickly go to the questions that have been asked. So I think Eric Asari is asking, what is the computation of VAT on, or how is the computation of VAT on the customs bill of entry? He wants to know, what amounts, go into the taxable value or the base of VAT in computing the VAT at the point of customs, whether it includes import duties and related levies. Then he would also want to know what the legal basis. Okay, I think for the legal basis, let me help you. I think that would be Section 43 of the VAT Act. But maybe you can just elaborate more on how the computation is done on the value for VAT purposes.
The basis of computing import duty is the value of the goods or the cost of the goods, the insurance and the freight. That's what we call custom value. On that, you'll be charged the import duty and all other applicable taxes. The nature of the VAT law shows that other taxes like the import duty, NHI and GET fund must be added to the cost of the goods before charge. So that the nature of charging VAT in a normal market is not substantially different from what happens in import. So the value of the goods must be taken, the import duty added, NHI and GET fund must all be added before the VAT is charged as it pertains. So the applicable VAT as happens when you go to a shop to buy goods is relatively the same as in imports.
Thank you very much. Thank you very much. And so maybe for the person who asked that question, I think in terms of the legal reference, remember that when it comes to VAT at the point of customs, the VAT Act empowers the Customs Division of GRA to administer VAT when it comes to importation of goods. And the relevant law for the calculating the value would be Section 43 of the VAT Act. I think there is, I don't know if it's a comment or a question, which is to the effect that sometimes when goods are being sent to Ghana from UK, sometimes a lot of people request for amounts to be reduced on invoices. So maybe, Ruben, let me ask, where people are suppressing the value of goods, how does customs treat such a thing? If, for example, you are seeing invoices but do not trust that the values being declared are correct, how does customs treat such things?
Okay, as I discussed earlier, we are looking at imports where there's a sale from the exporting country. Then it will be treated, the determination of the value will be according to the agreement or custom valuation, where either we accept your transaction value, which is the price paid or payable on the consignment, or if you are dissatisfied and there are conditions that exclude you from a transaction value being accepted, then we look at the value of identical goods or similar goods, then computed value or up to the fallback value. Then we have risk management tools that we use to risk manage your value, because everybody is buying from around similar market and everybody is producing the same goods that you are buying. Their cost of production will not vary so much. So when persons who bring in larger quantities says that, excluding maybe any buying commission they pay, says that the goods cost them ABC, and we determine that that transaction is at arm's length. You bring in a smaller quantity cannot say you bought it lower than that person. So when we look at your documentation and look at their documentation and look at our risk management tools, we will know that your value you are declaring is not the best, or it's not the actual transaction value. Therefore, we will not accept it. That is when the transaction value, the invoice is submitted to us. And also, if the invoice look doctored, you cannot fake things completely. The person who sees it will know that this thing has a problem. So that can be the basis for such a thing. And also, because of the variation in quality of products, so goods originated from some markets may have a certain particular value, and some countries may also have a certain particular value. But if you don't have separate values for the two, maybe the person is bringing the very quality goods. I don't know who will advise them. Maybe someone may advise them to let the goods correspond with the value of some from other countries. Maybe that's what the person is talking about, that they will ask them to suppress the invoice value. But that's why I said earlier, aggressive tax avoidance is not legal in Ghana. So when the Commissioner General realized that you've undertaken a transaction by avoiding tax, you can recharacterize your transaction and charge the tax on you with the penalty if it deems fit. So I'm not sure a custom officer will ask them to reduce or suppress the invoice, but maybe, people are also in the business to ensure that their clients pay the minimum tax possible. So they may do the untoward, which they may do to maintain you as a client. But over time, when it's time for you to be punished, they will go away.
So essentially, maybe just to wrap it up, essentially it is absolutely important that the correct customs value is declared. The correct customs value is declared. Remember that any time that customs sees your value, I mean, you're not the first person importing that item into the country. And so customs is very familiar with various import amount and import values. And if the value you are declaring is significantly or materially different from the value that customs would reasonably expect, then the law allows customs to go beyond the transaction value to determine what would be a more appropriate value. And then also, if you as an importer is seen to be under declaring in terms of the value, then there is the possibility that you could find yourself probably maybe on the red channel, and then have your imports undergo more scrutiny than maybe otherwise it would have been. Yeah.
And also when you overvalue, then you have the Ministry of Finance and other agencies to contend with. So customs just want to show your transaction value. Any discounts, royalties, and assists that you are supposed to enjoy must be stated on the document. It will be looked at holistically, and your value will be determined on which the duty will be exacted. So even if you overvalue your item, and over time you have the ministry and customs to contend with. So under valuation and overvaluation is not countenanced by customs.
Okay, I think there's a question that I think someone is asking, I guess maybe having to do with the suspense regimes, for example, like the warehousing. The person is asking that, so when you import large quantities, that will be under customs control until payment of duty is made. Also, what about the warehousing cost and how would the costing be done? So essentially, I mean, there are there are businesses who have, customs bonded, registered customs bonded warehouses with GRA. If you want to, clear your goods into a warehouse, what you need to do is that those businesses, together with yourself, there is a bond that is placed to make sure that, the goods are not, ex-warehoused or cleared for home use without the applicable taxes being paid. So then what then happens is that as and when you need the goods, whether to sell or to export or to process or etc., you remove them and then you pay the applicable taxes. Of course, in terms of whether or not the overall warehouse rent, etc., would outweigh the benefits, it's up to you to make that calculation and make that determination. But then also remember that if someone has to pay all the duties at a go, the person may have to, for example, maybe go for a bank loan. And there is also the cost element, for example, of interest. So I think those are all calculations that businesses would have to make and to see what best suits them. And then there is this question.
To come in, some goods by their nature are not warehouseable. So when you deal with such goods, there's no way you are going to warehouse them. And also the ministry from time to time sometimes can issue notices, or the Commissioner General orders saying that these goods are not warehousable. And some goods, before you can warehouse them, you have to put in facilities that will be able to regulate the temperature, humidity, atmospheric conditions, because some goods are susceptible to such conditions. Therefore, you have to put in place facilities that will ensure that the temperature or the atmospheric elements are maintained. So that is how it is supposed to be. Some goods are not warehousable, and some you have to put in measures, and some are normally warehousable for a duration of maybe 2 years or 1 year, depending on the use of the goods and whether you are into manufacturing or you are into normal sales. Alex, it looks like I can't hear you.
Okay, sorry. So I think there's another question asking how long goods can be warehoused.
That's why I explained earlier, depending on whether it's a perishable item, which is 3 months renewable, or whether it's a normal good 1 year, or whether it's goods for raw material for production that are 2 years, which some are not renewable, some are renewable. But if you have genuine concerns, you can apply for them to for an extension of time, because so you have to know the goods you are bringing, whether they are perishable, whether they are for normal sales, whether they are for production, to be able to determine the duration where the goods will be in the warehouse. And goods that are almost nearing expiry will not be given the full, because they will expire. When they expire, then everything will happen. So the expiry date of the products must also be taken into consideration when warehousing such goods.
Thank you very much. Thank you very much. That's good to know. So one participant is asking that sometimes we hear that the system is down from the clearing agents. So when, in quote, the system is down, what happens?
Okay, as I discussed earlier, I indicated that we are currently using the integrated custom management system, that is the ICOM system. It's a computer system, and things that affect information communication technology in Ghana will affect them too. So when they are affected, it will affect work to be done, so it will delay. And so currently we were having challenges, and they promised that it will be reviewed, it will be resolved by the end of this month, and we are hoping that it is resolved. So system being down is a genuine concern by the IT provider, customs, and all other stakeholders. They will be reviewed, it will be resolved by what the IT provider says by the end of this month. So what happened is, that is why I explained earlier that take advantage of our pre-arrival facilities, so that even if the system is down, you have gotten your tax payable, you have gone through your formalities before the goods have arrived. Then the system being down will not affect you so much. But I understand some people also want the goods to come and they are sure before pass their declaration. But take advantage of the pre-arrival formalities. Thank you.
Okay, so someone is mentioning, and I think from where I sit and from what I know, it sounds a bit unusual, but let me still go ahead. The person is saying that there are cases or instances where knockdown parts, the taxes on them are higher than bringing in finished goods. So generally, I think in your presentation, you did mention that in terms of the customs, the rates, the tariff rates, generally for essential goods like some pharmaceuticals, etc., usually they are exempt. And then generally for raw materials, you find them being at generally, that means there may be exceptions, but generally you find for raw materials being about 5%. And then for semi-finished products, usually around 10%, for finished products around 20%. And then for some products that we think that as much as possible, we wouldn't, you can bring them in, but we wouldn't like you to bring them in so much. We see sometimes using 35%. And I think that is from my familiarity with the ECOWAS Common External Tariff System. I think this is quite consistent across board. But I'm guessing here, maybe let me attempt to answer, and then Ruben, you can also come in. I'm guessing here that sometimes it has to do with the tariff classification that the importer lists. Because, for example, if you are bringing an intermediate, product and you use parts, what you're communicating to customs is not that you are bringing in maybe a knocked down part, but what you are communicating is that you are bringing a spare part. And usually spare parts instead of component parts for manufacturing. Component parts for manufacturing usually have a lower rate, but usually when it comes to spare parts, they may, in some cases, have the same rate as a finished product or maybe even higher. So Ruben, maybe you can also come in on that.
Okay, the case of knockdown parts being higher than finished products, I don't know whether it's the same person who is bringing his knockdown parts and his finished products. The tax rates are based on the tariff classification. That is why when you are able to get a qualified person, the person can be able to provide you with the appropriate tariff classification, which will let you pay the appropriate tax. But when parts, there are parts we call parts of general use. Despite maybe your complete machine coming under 5% for any other processing conditions where you are paying 5%, maybe that part doesn't apply to only that machine. It can be used by other items that are charged at 20%. So because we know that that part cannot be used for only that machine, we will not allow you to come under 5%, lest you go and distort the market. So parts that are considered parts for general use are charged at a different rate than machines. I don't know whether that is the person's concern. So it depends upon the type of parts. Parts for general use don't come out at the same rate with the machine which they apply.
Okay, so essentially what I hear you say is that first of all, it's important to look very well at the tariff classification. And then also when it comes to the concept of parts, where it has to do with parts for general use, they may have a different rate as opposed to, for example, a part for manufacturing. For example, let's say more or less a raw material part, if I may put it that way, for building something or for manufacturing. I see another question.
Like example, bolts and nuts. Bolts and nuts can be used on several machines. So it cannot be to your machine alone. It can even be used on cars. Cars are not 5%. Most cars are not 5%.
Yeah.
So if we say you are bringing bolts and nuts for machine and we allow it may go and find its way into the other side. So it depends on the dynamics of the parts, whether the part is for general use, whether the part and the value of the part and the value of because maybe I don't know whether the machine was older and the part is newer. Those are also considerations that influence what happened.
Thank you very much. Thank you very much. So I think there's another question having to do with system downtime, but I think that has already been answered. I think there was an answer to that where Ruben mentioned that I think the service provider is looking at it, and the indication is that they are hoping to get it done by the end of this month, which I guess is today. But let's see how it goes, and hopefully, if they are able to keep to it, hopefully we'll see less of that. Yeah. All right. Okay, I'm seeing this question. It says, if items have been auctioned to me for production, what are the processes I'll follow to take those goods? What are also the potential payments to be made? And if the amount auctioned are high for me, how can I apply for reduction? If yes, how do I go about it? So maybe let's start with the first part, that, if someone, for example, have undergone the auction process and have received goods through that auction process, what are the payment mechanisms, etc.? And also if the amount that, okay, so let me leave it to you to respond.
Okay, auctioning can be at a reserve price or not a reserve price. So an auction is basically persons competing, mentioning the price of the item that they intend to buy it. So if you go and mention your own price, that is how much I intend to buy it, and you are not saying it's too high for you, then what do? You walk out, you walk away. The item may be re-auctioned at a later date, but you may have prevented yourself from further auctions because you've not shown yourself as a person who want to comply with our law. So when you go and mention your auction price and it's too high for you, and it's like for your pockets later, you may chicken out, if I may use the right word, but consider it that you are blocking your own chance of auctioning later. So that is the basis of the auction. So when the goods are auctioned to you and you are the winner of the bid, you'll be given an auction slip, which you have to submit to your custom house agent for the necessary declaration to be passed for your goods to be taken. So that is the procedure for it.
Thank you very much for the answer. I think there are about 2 or 3 more questions, so we can just look at them and then we begin to wrap up. And someone is asking that if a container exceeds a particular weight, is there a special or additional import tax imposed on the goods?
No, most of our taxes are ad valorem on the value of the goods. It's only a few instances where the excise tax is specific on the gram, the weight, or the volume of the goods. So if the container is overweight, I'm not sure the shipping line will even carry. But if they are able to carry it, and we are able to declare the appropriate tax to us, the appropriate value to us, the tax will be exacted on it, and you will pay the tax. So I'm not aware of if the container is overweight, you have to pay extra. I'm not aware. Maybe I don't know whether it's with Ghana Ports and Harbour Authority, but customs, as long as we are able to determine the value of all the goods in the consignment, the tax will be exacted.
Yes, thank you. So what I hear you say is that customs mostly is ad valorem, except in some cases for excise taxes, where, for example, I think tobacco products and a few which are specific. So provided that the value that you have declared is a value that customs can trust, that would be the basis of the import duties you'll be paying and related taxes that you'll be paying. Okay. Okay. Okay, so someone is asking that there are instances where the duty, and I guess by duty, the person means the import taxes in total, because there are quite a number of taxes, whether the duties or the taxes are more than the cost of the items. What causes that? Are there probably issues with the documents? Okay, so maybe let me attempt an answer, and then Ruben, you can fine tune it. So I think that there are different items have different tax implications at the point of customs. For example, if you're buying, let's say, a tobacco product, okay, if you're buying, let's say, a tobacco product, there are certain items that the nature of the product itself attracts a lot of taxes. So if you're buying, let's say, tobacco products, you have excise duty alone going up to maybe about 50%. And in addition to the 50%, there being also a specific tax based on the weight or the quantum of that. In addition to that, there's going to be the VAT and then the import duty. So it's very possible, for example, that if you are taking some, especially excisable products, by virtue of the nature of the product, it's very possible to have the tax element on the point of importation being high. But that is not only at the point of importation, because for excisable products, even where produced in country, they may not, suffer import duty, but they will suffer the other taxes like VAT, excise duty, etc. So it's important to note that. But then for the rest of the scope or what may cause that to happen, I'll leave it to you, Ruben.
Okay, I duty more than the cost of the item. I don't know whether the person imported a vehicle, because that is usually the complaint we get. Buying maybe a used vehicle at maybe some dollars outside there, only to come to be slapped with duties and taxes. That when you convert will be higher than how much you bought the vehicle. But the challenge here is a used vehicle. How do we determine the level of usage so that the tax you will pay will be different from what your brother pays? So there's a uniform system design. The value of the vehicle, what we call the home delivery value or the manufacturer's suggested retail price, how much the car was supposed to be, was sold first to the first buyer. That value is taken, and depending on the age of the car, it will be depreciated. So whether the car is completely mangled and you bought it cheap, it will be considered as a used car and treated like every other used car to ensure uniformity, so that there will not be. So if maybe, I don't know, that is where he saw that he bought an item that there was and also we have what we call our risk management tools. We call reference price list. You may have gone to the market and have seen an item that you bought cheaper, but our risk management tool says that that item was not supposed to cost that amount. We don't know how you got it, but this is the value we are applying. When we apply that value and the rates come on it, some items are 35% with excise tax added to them. It can be almost more than 100% the cost of the item. So if the taxes all combined together becomes 100% more than the cost of the item, it is the nature of our tax system. So that is how it's supposed to be. I don't know if I've answered that part.
I think you've mentioned that there are various things that can contribute to that. It could be by the taxes that they can attract by nature of the nature or the item that is being imported, or there could be other things. For example, if you got a sweet deal, but then the valuation method employed shows maybe a different value, then that could also result in the taxes being higher than maybe the person may be expecting. I think I see this question: are surgical instruments exempt from import taxes? I guess that would depend on the HS code. But Ruben?
Yeah, that would depend on the HS code. So it will have to be taken on a case by case basis.
Okay. I'm seeing, what are some of the advantages startups have in importation, since startups usually have low capital? Are there any? And then also, I think maybe the question has more there's a follow-up to that question. It says that, for example, in the production or manufacturing company, is there the privilege of using imported raw materials and paying the duty later? I think that has been addressed, but you can go ahead and then maybe rehash that.
Yeah, for a startup who is, maybe the startup is it into production?
Yes, production.
Under our common standard tariff, raw materials, most of them are 5%. And even the equipment that you are going to use to process them also come in at 5%. So at the start, those are avenues that a startup can take advantage of, the raw material being 5%, the raw material being capital goods. And the startup can also ensure that, okay, the material I want to import, it should come from an origin where I can get a preferential rate of duty exemption or duty reduction. So you can look at that avenue too, and also do that as a startup. And a startup, to your I said there's duty rescheduling by GRA. You can walk into GRA and say, okay, this is my duty. I want it to be rescheduled. I want to pay it in bits. But it comes at an interest because that is government money you are holding. Government also need money. So you can look at the rescheduling avenue if you can be able to show that you can pay in bits, and you also take about advantage of where the goods are coming from, and you can also look at the raw material you are going to bring in, and the capital goods, whether it's for production.
Okay, so maybe just to rehash that, for a startup in manufacturing, first of all, the raw material that are being imported usually have a duty rate of about 5% instead of 10% or 20% or 35%, as the case in some other products may be. In many cases, also the machinery also have a lower duty rate. And then he also mentioned that occasionally, sometimes an arrangement can be made where the duties are paid over time, but then that would have to be arranged with the Revenue Authority, and interest may apply. We also did mention the concept of suspense regimes like warehousing, where if you had to, for example, for purposes of economies of scale, import in large quantity, you can warehouse them or clear them into a warehouse and then pay duty based on the amount that you need to, for your manufacturing process at that particular point in time. And then every time that you remove the goods from the warehouse, you pay the additional duties, as and when. So that can also help from a cash flow perspective. It is also important to note that under the VAT Act, there is room for manufacturers who are registered with the Association of Ghana Industries to apply for a regime where we talk about upfront relief. So essentially what it means is that at the point of importation, and that only has to do with VAT, so that doesn't apply to all the taxes. But at the point of importation, you do not have to pay the VAT component. But after you have manufactured the product and then you are now going to sell the product, then you charge your VAT when you are selling the product, and then you account for the VAT to GRA. So all those are legal avenues that exist for startups, and then also exist for businesses operating in specific sectors like manufacturing.
Yeah, okay, to add, for startups, if they are able to take advantage of the VAT deferment as you discussed, because VAT is a major component of our tax system. The goods may be 5%, but the VAT invariably, because the VAT will include the GET fund, the NHI, and the GET fund. They all go together. So if you are a manufacturer, as you indicated, you registered, and that is deferred for you, it can also be a relief for you. So it's a major component, especially for 5% goods.
Yes. So for manufacturers, especially for a manufacturer, but to take advantage of that, you need to be registered with the Association of Ghana Industries. I think that you would probably need a recommending letter or so from the association. And then once you make an application, you'd get what is called the upfront relief, where at the point of importation, you do not have to pay the VAT and related levies like National Health Insurance Levy, etc., having to do with the import. But then, of course, once you produce and you sell, you have to charge and account for the VAT and the levies to GRA. Okay, and I think there is a comment here that is indicating that the AEO, the Authorized Economic Operator Program, is currently ongoing. As at towards the end of last year, about this time last year, 9 companies had already been certified and were enjoying benefits. And so for companies and businesses that want to consider that option, please feel free to reach out to GRA on that. And if you need a consultant to help you in the process, you can also have a conversation with us at PwC, and we'll be able to guide you through the process. Thank you very much. Thank you very much. So thank you very much, Ruben. I think we have learned a lot. We have really learned a lot throughout today's presentation. As we close the Q&A session, I just want to rehash a few things, and then we bring the session to an end. Essentially, we've learned that compliance is very essential. It helps you to build a track record that can help you to get your goods cleared faster. It can help you to reduce cost overall, and it can also help you to, avoid penalties, etc. We've learned about various suspense regimes that may exist. We've also talked about preferential rates that may apply based on a free trade agreement that exists, for example, the Africa Continental Free Trade Area, the ECOWAS Trade Liberalization Scheme, and the Interim Economic Partnership Agreement for EU and then UK originating products. We've looked at various benefits of compliance, such as avoiding penalties, getting a more favorable channel, and then also helping you to qualify for things such as AEO status. And then finally, I would want to say that maybe one of the things that Ruben mentioned at the beginning of his presentation, that aggressive tax avoidance or tax planning is most likely illegal and would most likely end you in trouble. Remember that if you do anything that is outside the confines of the law, the tax laws in Ghana empower the Revenue Authority to recharacterize such transactions and then to choose a more appropriate tax for it. Thank you very much, Ruben. Thank you very much to all our participants. Maybe in concluding, just please note that this session has been recorded. UKGCC will be making it available to you. And then also, if you have any follow-up questions, you can channel them through UKGCC. This particular webinar has also been live on Facebook and through UKGCC's other social media channels. Thank you very much, everyone, for joining. Thank you, everyone, for joining. We appreciate your spending time to join, and we look forward to looking forward to the next Tax Dialogue series. Thank you very much. Thank you very much, everyone. Have a nice day. Bye.
Bye.